I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Some green arrows around the world as Japan may have found a short-term bottom. We've been up 20 out of the last 20 Tuesdays. Will we see a 21st, or will market rotation mute corrective activity? I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So we are seeing some green arrows around the world after we recovered from early weakness in yesterday's session and look to potentially see our 21st up Tuesday in a row. So do you think the rally is back on, Scott?
There are some titles saying, lucky 21 or unlucky 21. Depends on where you stand, whether you're short, whether you're long, whether you're playing a bounce. But anyway, finally yesterday, or not even finally, yesterday we put in a little bit of a low. Okay, we've had this corrective type phase. We had this upper pivot. On Friday we actually resolved it to the downside. So yesterday, we weren't sure what would happen, especially when the futures were up a little bit. But what happened is some sellers came in. We broke through Friday's low, came back above it. And now the question is, can sellers contain a bounce to get further downside? So I do think that's what traders are asking themselves today, because especially on Tuesday when you typically have a strong market. So if today isn't a strong market and sellers do contain the bounce, perhaps we could see lower prices. But right now it's more neutrally.
All right. So why don't you give us a visual then of the levels that you're watching today?
Okay, because the levels are what is important, because you can navigate these ranges without having a clear, conviction either way. So if you look here at the chart, you will see that, first of all, here is the macro trend that started in November. Okay, tested it here. This started the rally this year. Okay, and then just to continue along, this has been the macro trend. Okay, along the way, there's been 3 pivots. This was one where, back in February, we broke to the downside about 3.5%. But what happened here is on this day, you had a small outside day. People weren't, you didn't know, was this an oversold bounce or was this a potential swing long? What turned in is, you had some follow through. It held sideways, held the upper area, and continued. So that, kept the rally underway going into this breakout failure. Okay, and with this, you also had a move to the 50-day. This was like 4% plus. And then this engulfed this little bottom area. It wasn't a red dog reversal, but it wound up closing above the prior day's high. And then you had a quick move, through resistance. Then we held higher and continued. So now the question is, this upper range, will we see more downside, or will we just go maybe a little bit sideways and then continue? So, if you took risk off on that Wednesday when we hit 1687 and had the outside day and then navigated this range, some, went home short maybe on Friday or net short. Yesterday you had a little bit of time to make an adjustment. We went below 1630, made a new low around 1622, came back above it. So this is a little micro red dog reversal. So what the bears are going to want to do in order to see lower prices, they have to defend this area. They cannot let the bulls reclaim this, just say 1650 to 1658 area. Otherwise, this pivot will look a lot like this one and a lot like that one. So at this particular point, there's a lot of different types of trades going on right now. It doesn't always have to be momentum. Sometimes, you could buy the dip and then see if it builds.
Right. And yesterday, the rally was led by the Dow and defensive names. Do you think that opportunity is likely to remain there?
Well, every phase of this rally, there's been different leadership, and the defensive names a few months ago were the place to be, and then they had an outside day and broke lower. And then yesterday, you had a little bit of a red dog reversal in some of these names. So at least they were worth an entry, and now we need to see if it builds.
Right. Names like J&J, which picked up buyers at its prior breakout level around 83, and it actually closed on high, so perhaps some continuation today.
Yes, and that's something that I went long, and I haven't been long J&J, all year really, I don't think. But yesterday someone said, oh, look at these names, they're perking up. So I said, okay, let me look at my relative strength rules. Doesn't matter if I'm a big fan of J&J, but you look here and you'll see that here is your outside day in Johnson & Johnson. Okay, it broke a pretty long-standing trend here. This was a big trend that was underway. If you sold here on the outside day, you sold it perfectly almost. Then if you could have perhaps even sold here. So if you did so, yesterday you had your outside day when it broke below 84.18, came back above, and I'm in it, and maybe I'll trim and trail it, but we'll see what happens here. Is it a bounce to be sold at 86 and change just for a tactical trade, or does it go sideways and continue? Right now you don't have to worry about that. You have a good entry, you have a stop here if you want to treat it as a swing trade. If you're looking at it as a 3-day trade into resistance, treat it that way. It all depends on your time frame.
And Procter & Gamble put in a red dog reversal around its 100-day and managed to close above that level. So could that be the beginning of a bigger bounce?
Well, it held support, and again, if you sold strength or you got out with high-level stops, you look at the chart, you had the luxury of trying it yesterday. Here is when you had a big gap up, you remember that, then boom, an engulfing bar into the gap could have gotten a lot of traders out of the way. And then especially when it had follow-through to the downside. So here into major support, if you sold correctly, it was worthy of a tester. You could either be long versus yesterday's low, and say, I'm going to, I just got this stock, cheap, so to speak, compared to where it was up here, or you can do it just as a trade. Again, you don't know where these lead to, but it depends on your time frame. For me, if I was long this, I would probably sell some if it bounced into the moving averages. But if it reclaims these moving averages, perhaps you got a good trade for a longer term this year. But all in all, entries and exits matter. If you exited right around here or here, you could give it a try into support and then close on the high, so it looks okay.
And Coke saw some nice gains yesterday and got a nice push into the close. Would this one be on your radar for continuation today?
Yes, these all look very similar where they got a little beat up, names, money rotated out of them and then rotated back. And that's what you do as a trader. You make maneuvers, you make adjustments. You look at Coca-Cola, it had a nice breakout here, had an upper level consolidation. If you used high level stops, here you had your doji. On this engulfing bar, if you sold it around 42, okay, because this was your exit sign, you had the luxury of saying, okay, look where the prior breakout was. It's right above the 200-day. It broke below, $39, came back above it. So if you just took a day trade yesterday, you made money. If you kept it long, you could use this as your stop, or see how it deals with this resistance. Perhaps it's just a trade back to resistance, or it could be something you're looking for, into the end of the year. It all depends on your time frame. But some money rotated there, so you have a new point of reference.
And there's Colgate-Palmolive, which also had a red dog reversal around the 100-day and closed on highs. So where's next resistance there?
Okay, that's the question. Where is resistance? How will it deal with that resistance? And if you look here, this also broke a trend line. So if you were riding this trend from earlier in the year, you had two different exits. You had one, on this accelerated trend line, okay, right, where when it broke right here, that could have been your exit saying, okay, I'm done with this, trend's over, broke this, broke that, and then, now you had your reversal, okay, where it went below the prior day's low. These are all red dog reversals, by the way. Sometimes they're good for a day and a half, sometimes they're inflection points. But anyway, I could see a retest of this area, and then that'll be the question on whether or not it continues or it was just a trade.
And Kimberly-Clark picked up buyers at its 100-day as well. So what are the levels to watch there?
Same type of thesis. This one didn't have as much power yesterday. I actually went long this one too. And, I said I'll give it to the lows of the day, and it didn't break the lows. And now if it were to get above yesterday's high of 97.12, you could see a move back to retest right here, which is close to 99. So overall, we might see a trade back to retest some broken trend lines. So if you sold here at 101 or here, you have the luxury of testing it, and then you get to see whether it's just a trade or something better or bigger.
All right, well, as Japan finally bounced yesterday, we're going to go in the trenches with some Japanese names. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
Well, Japan finally bounced yesterday, and Scott, as you were tweeting yesterday about possibly getting some Japanese exposure, what are some ways in which you might do so? Well,
it's funny. It was somewhere, I think, midday or early in the day. I'm like, you know what? Japan's pulled back almost 20%, like 15+%. If it was our markets, I'd be looking to play a bounce. So I figured like it's been a risk off, risk on in Japan. Anyway, I had to throw that in there. I was like, how can we get some Japanese exposure? So the great thing about our community is everyone has a lot of knowledge. So some people were, they came up with some suggestions. My suggestion was the EWJ because, it's something that I've traded before. And then a lot of other people had other alternatives. So let's go through a few of them. The first one was EWJ. You look at the chart here. This is what I bought yesterday. Japan has had a massive move. From November, it started the rally, and then the rally intensified, in late March on this gap up. And then here was your outside day for the EWJ. So the high here was 1243. It went through 1229. This was your exit, and some people probably got short there. Big gap down, continuation. So to me, I'm like, you know what? We just filled the gap, and we're above the 200-day. I'd be willing to take some risk that I'll buy here. And if it goes all the way down to 1027, I'll accumulate it for some type of bounce trade. Well, anyway, it did close off the lows, and now Japan was up 2%. I believe this ETF is already retesting where it broke right here around 1110. So for me, what I'll do is I'll probably sell some into this bounce because what is it, 3% in a day? And then if it could hold hold in there, perhaps I think we see a little bit more of a bounce up to about 1140. So I'm treating this as a trade. Some people are saying, do you think Japan bottomed, and is it going to make new highs in the year? At this point, I'm like, it doesn't really matter. Here is your exit if you saw this outside day, and here was a decent entry. So now just trim and trail.
And another Japanese ETF, the DXJ, looks like it could be getting ready to bounce as well.
Yes, and this one's a little longer, so it's like paint the fence. Not wax on, wax off. I'm a big, Ralph Macchio, not anymore, but fan back in the day with Mr. Miyagi, if you saw all the Karate Kids. Anyway, little fun, but it is fun if you did pick up some of these things, and I think a lot of the community did. Here's the DXJ. Some people are like, you know what, Red Dog, this one has bigger ranges. You can go with this one. But if you look at the pattern, same type of thing. Here's your outside day, which was a little bit of a clue or a day to take notice to get out of some of this. If you rode this, and if you did, congratulations. Here's your downside. And then yesterday it did a bottom tail into some support and closing the highs. So first level of resistance, which it's probably opening at. So if you took some, maybe sell a little bit right here into this 47.37. And then ultimately, though, I think you get a gap fill up to about 48.45.
Well, and if you want to get involved with the Japanese yen, the YCS could be one way to go. It found support at its 50-day yesterday and was able to close above it.
Yes, and this is some ways to play it also. And I know a lot of guys in the beginning of the year, they went with this because they looked at their structure, and you look at what they did with the yen, and here was a way to play it. And yesterday it came to the 50-day. Okay, here's your little topping tail, which wasn't extreme, but little topping tail, way to exit. And then this just held, the 50-day moving average, which it held right here, and it's been above for all of 2013, so to speak. So anyway, if you chose this one, this would be your resistance right here around 66.89, and then here's your gap fill there. So it's either just going to be a tradable bounce into a lower high or something bigger. Choose which way you want to trade it.
And how about Toyota as a way to play Japan? It actually found support at its 50-day yesterday, breached it, but then was able to close back above it. Yeah,
this one, again, we were just discussing, and people are like, why not some equities in Japan? They're like, Red Dog, in your 2013 thesis, you talked about Toyota, and I know it, exceeded all your, you were crying that it exceeded all your targets because I really didn't play it that much. I just wrote about it, unfortunately. So some people said, look at it here. So you look at Toyota after its outside day, holding the 50-day, closed on the high. So if you saw this bottom pattern yesterday and got long, congratulations. I think the first part of the bounce, we'll take it just like everything else to this 120. So either treat it as a few-day bounce, or perhaps you think it's going to make new highs. At this point, nobody knows, but here is your first reversal. Here's your gap up. If it did, I think it's gapping up today. So if it holds a gap up, goes sideways, then perhaps you get continuation, and then here's that other gap that could get filled. So on a lot of these vehicles, you now see resistance 1 and resistance 2. So we'll see how potent this bounce is because it's been quite a move lower.
All right, well, let's do some quick hits here and talk Tesla. Still providing great two-way opportunities. What are the levels to watch?
Yes, it's a different type of vehicle than electric. It's a trading vehicle too. Anyway. But So here you go. You look at this stock, and in this stock, technicals really matter. Okay, first, you had your gap up on earnings. Here was one outside day, which really didn't last too long. You had a quick move, down to holding like 78-ish, and then it came back up, got tight. Here's where it showed its relative strength. You had 3 up days into new highs, and then this was your other recent outside day when it went above 110.75 to 114.90, came back below, hovered. And if you trade this type of stock or drive this type of vehicle, you need to look at your warning signs or your signals. And right here, when it broke below this low of 101.20 or 99, you had to use a high level stop if you were trailing it. Some might have been short here and said, okay, I'm going to put a stop in at the high of that day, and it's come so far, I'm just going to ride it lower. If that's your style, great trade. It then opened lower, held above the 21-day, and right now it'll be interesting to see, does it stay above 88.25? Go sideways, build a whole new upper range before doing something different. At this point, I think it's going to be very choppy, very rangy. It's not going to have the same type of movement that we've seen because after a big move, you can't expect that. But anyway, you have yesterday's high at 97.62. You have the low. You have where it broke down from. So see if you want to create, a really big channel here. All right, just maneuver it in the different parts of it. Here's your new micro support. Here's some resistance. There's bigger resistance, and just keep taking your trades there.
How about Microsoft? Nice breakout yesterday, closed on highs, perhaps some continuation today.
Yes, this one has been named to go to, like it's like it's been reborn. But anyway, I think that's because of the weekly and monthly charts that all triggered to the upside. I've talked about my target on Microsoft, which I think I'm going to have to lift. You look here at the chart, it did break out of this upper flag type pattern. It's been hugging the 8-day moving average ever since what? Goldman downgraded it right there. Anyway, with that said, I think this is a line that I showed resistance for a potential target for this year. I have to admit, with this type of action, you might even see 40 plus.
And sticking with mega cap tech, we're seeing Cisco continue to hold above its 8-day. Can it possibly join the ranks of Microsoft and Intel?
It's trying to stick with them. They're all. It's like they say the 40 is new 30. In my terms. Here you go. We're reverting back to the priceless wonder kids of back in 2000. Anyway, here's your gap up in Cisco, holding higher. Here's your add-on pivot. If it can get above and stay above 24.68, you could see some more upside. I think this is something you keep in the drawer also. A lot of these mega caps, have done nothing for a decade, and they're all starting to break out of these weekly and monthly channels.
Well, and checking in on Apple, we're seeing a lot of market personalities out there right now saying that a bottom is in Apple. Would you agree with that?
I'm trying to stay with that thesis too. I still have a call spread on. I still, I'm long the stock. Yesterday when it went negative, I did get out of my stock. And then when it came back at the end of the day, I'm like, all right, it's back above 450. It still looks good. I have the big developing conference next week. You look at the chart, this inverse head and shoulders pattern still intact. Left shoulder, head, right shoulder. It held this ascending channel, or it held where it had to. So it'd be nice for it to just start getting into the upper 450s and just, and get something potent. Like have a 2-part day where you're up $3 in the morning and then you close up $6, not up $3 and just the buyback program starts to fade and it just fades. But anyway, this was Friday's high, 457.10. If it gets above that, then you have, this neckline here where a close above that on some exciting news next week, perhaps 505, which a lot of those personalities are talking about, could happen at some point this year, maybe even this summer.
Well, and speaking of bottoms, Unipixel fell hard on Friday, but did it reach a bottom yesterday?
Let's see. I'll tell you right now, guys on my site were talking about it, and I haven't looked at this in a long time. And you look here, this thing's been battered. Okay, if you were long this thing, riding it, this was your exit around 35 on that wide range bar. From there, it's trickled lower all the way down. And then yesterday, it had a little bit of a red dog reversal. I got long a little bit. And I figured maybe we get some kind of bounce. So at this point, it's very heavily shorted above yesterday's high of 1710. Perhaps in a session or so, you get a retest of the 200-day, or we reclaim the 200-day, and that could bring you to 1875 to 20, and perhaps even a little bit higher into the 24 area. So at this point, trade versus the low here of 1431, and I do think it could continue, and I think they have a conference in the next few sessions as well.
All right, and just for our gold bugs out there, the GLD did register a nice gain of about 2% yesterday. Do you think we'll see continued strength there?
Well, it's opening lower, and this whole micro trade in gold is so random. And for me, I hate randomness. I like, strategic, systematic. What are a few other words like that?
Reliable, more reliable.
There you go, reliable. I put it on the spot. You got it. and with gold, you're getting far from that. And yesterday you did see some strength. Okay, it did stop at resistance right around here in the GLD. It's opening a bit lower. If it can go from negative to positive, I think the next trade for some momentum will be through this, 137-ish. Overall, it's hanging on to this double bottom by a thread. You do have a little uptrend that it's been following right now. So if it were to break below this, I would get out of the way, and then especially if it broke below this. But if it wants to continue higher and retest the moving average around here, it's going to have to get through 137-ish and absorb this down open.
All right, so what are your closing thoughts as we head into the trading session today?
I just think there's a lot going on. You don't want to be too spread out, but there's been a lot of range type trades where you could be long, you could be short, you could look for some momentum, you could buy some pullbacks like we saw in the defensive names. You could look for like the opportunity we saw in Japan yesterday. There are opportunities that are coming out of the woodworks at different times. So if you get familiar with a lot of these different type of setups, you'll always find something to do without having to be a perma bull or a perma bear. Just be a perma setup guy, looking for setups. And at this point, I find myself in I think 5 or 6 names, and I still have a put spread on. And guys said to me, "Oh, Red Dog, but you said you see 161 in the spiders, before potentially new highs. Why are you getting long on this stuff?" I'm like, because we could trade. Right. And I put on last week. I think I put on the 164s on Friday's low. I sold the 162s. So now on this bounce, maybe I'll buy back the 162s that help finance the put spread. And then I'll stick with the 164s, and if it's wrong, okay, I'm insuring some of my positions if it's right, and we head back down there, maybe then I'll resell the 162s and keep trading around it. So if you're at your desk and you're there, have quick feet, look for ideas, take trades that are conducive to your style, and just have an open mind because there is opportunities.
All right, and be a perma setup guy.
Perma setup guy.
I like that. All right, happy trading, everybody. Have a great day.